The Constitution of the United States of America guarantees equal protection under the law in the 14th Amendment. The Founding Fathers, having abolished titles and political power of the nobility, inserted this clause to promote and protect equality between American citizens. This was eventually used to help African Americans, women, and people with same-sex attraction gain more rights and legal freedoms under the law. But the fight for equality was not over with the passage of the 15th Amendment, nor is the fight for true equality over with Obergefell versus Hodges. Under the radar for the last 150 years, there has been another form of discrimination imposed by the IRS, that of economic tax brackets. These tax brackets create a social class system among citizens, pitting the rich against the poor. Today in America, high-income homes are taxed a much higher percentage than that of middle and low-income homes. Taxing a different percentage from a citizen based on income is a form of discrimination, as it treats citizens differently. Instead of the current 7-tax bracket structure, which is filled with over 70,000 pages of corporate and special interest loopholes, Americans ought to utilize a flat income tax rate. This flat rate would be fair, as all citizens would pay an equal percentage of their earnings. We must ask ourselves, would such a tax discriminate against the poor? The Tax Foundation disagrees, saying a flat tax, or any other consumption tax, does not necessarily need to be structured in a way that increases taxes on low-income taxpayers. The key to what makes a flat tax is its consumption base. There is room to alter the tax system in order to define some level of progressivity in a consumption tax. In fact, it is entirely possible to promote equality within our tax system using a flat income tax and to grow the economy by creating new jobs. Senator Rand Paul's fair and flat tax and many other flat tax plans have been proposed even in the current 2016 election. The Tax Foundation analysis finds that Senator Paul's plan would grow the economy by 12.9% in the long run, create 4.3 million jobs, and raise $737 billion when accounting for economic growth. Such plans are not merely wishful thinking, but are truly viable alternatives to the current tax code.